Good afternoon. Who's on there right now? We're just going to wait a few minutes for probably people who are going to be signing on a little bit late, 2 to 3 minutes. Give them one more minute. Okay. Good afternoon, everyone. Welcome to today's SCORE webinar. My name is Bart Sharp, and I am the co-chair of the SCORE Staten Island. We are delighted to have you here today. This webinar is being sponsored by M&T Bank. And unfortunately now for the commercial side of the webinar. As many of you know, SCORE is a nonprofit organization and is a resource partner of the Small Business Administration with over 250 chapters and 10,000 volunteer mentors, and is driven to foster vibrant small business communities through mentoring and educational workshops. SCORE is also the nation's largest network of volunteer expert business mentors and is dedicated to helping small business plan, launch, manage, and grow. SCORE mentors offer area-specific advice at no cost via email, telephone, and video. SCORE also provides a wide range of services, including training, webinars, online workshops, courses on demand, and a library of online resources. We greatly appreciate M&T Bank's support in helping us fulfill our mission. Today's speakers, Christine Capris, Michael Klein, Michael Padilla, and Jared Schwartz, then they have graciously provided by M&T Bank, and we are excited to hear from them. Shortly after the webinar, you will receive a survey, and we would be grateful if you could take a few minutes to complete it. Your feedback not only helps us evaluate your webinar content, but also provides you with the opportunity to suggest topics for future webinar. Before we basically go on, there's a couple of housekeeping things, points. Your lines will be muted. Please use the Q&A versus chat. The way that is going to work is that after each section, each speaker finishes their talk, we will answer the questions and then move on to the second topic. A copy of the slides and recordings will be sent to all attendees. And like I mentioned earlier, I'd appreciate if you complete the survey at the end of the webinar. And with that, I'm going to stop sharing here, and I'm going to turn it over to Christine. And Christine, if you want to take over, appreciate it.
Hi, everyone. Again, thank you so much for joining. Welcome to M&T Bank Financial Empowerment for Small Business. My name is Christina Caprick. I'm one of the managers from M&T Bank in Staten Island, and I'll be one of your speakers today. Over the next hour, it will be about the fun world of banking. We are excited to have with us today our partners, Michael Klein, Michael Padilla, and Jared Schwartz. Do you mind, all of you, to introduce yourself? I'll start it maybe with Michael Klein. Thank you.
Sure. Thank you, Christina. Good afternoon, everyone. So my name is Michael Klein. I'm a business banking relationship manager at M&T Bank. I've been in banking for 17 years, been with M&T for about 1. And my role at M&T primarily consists of business lending. And that's the subject that I'll be speaking about today.
All right. Thank you so much, Michael. And Jared, do you want to introduce yourself? Thank you.
Yes, hi. So my name is Jared Schwartz. I'm with the commercial payments sector of M&T Bank. So I do the credit card processing. I've been with my bank for 3 years, been in banking for over 12 altogether, and I'm looking forward to discussing surcharging, which is my topic of conversation today.
Thank you so much, Jared. And can you wrap it up with Michael Padilla? Thank you, Michael.
Michael, you muted.
There we go. My name is Michael Padilla, Treasury Management Sales Consultant for M&T Bank. I've actually been in banking about 20 years now, and I've been with M&T for about 8 years now. We're going to talk about fraud protection and the ways that the bank can help you out, our small business clients, fight fraud.
Thank you so much, Michael Padilla, about that. With that, just want to make sure that we are all in an understanding. It's starting a business can be challenging and overwhelming, requiring a lot of planning, hard work, and dedication. Entrepreneur's journey can be a roller coaster with highs and lows. We hope this webinar will provide financial empowerment for you and your business journey. Today, webinar will be discussing around small business banking services, which is going to be starting with me. And then Michael Klein will actually talk about the business lending and how to use and obtain credit. And then Jared will continue with actually discussing about credit card surcharge guidance and violation in New York City. And Michael Padilla, you will wrap up with just fraud protection, which is what we're going to discuss at the end. And like what Bart stated, every section we will just take the question and we'll do a Q&A, and hopefully we'll wrap up with that. Thank you so much, guys, and let's just start it. I'm going to share my screen. So I hope everybody can actually see these slides right now. This is regarding a small business banking services. Before we get started, we just want to make sure that you all know what we're discussing currently. We're just going to talk about why is it important to actually discuss or understand small business banking services. We want to know to learn how to set up your business and up for success. Before we explore, why do small businesses need banking service? Small business require all kinds of financial support to open, grow, and thrive. From loans to get your business started, to building out a payroll system for your employees, banking services are a necessity for many successful businesses. You have to remember also, product and services may vary depending on the financial institution you choose. It is important to consider what your unique needs are before selecting an institution to bank with. First thing that you want to really, what's really important is securing funds to open or grow your business. Do you need additional funds to get started? Do you need a loan to get a bigger space, cover some cash flow fluctuation, acquire a company, or buying a new equipment? And then next will be accepting payments from customer. How will customers pay you for your business products or service? What type of payment? Could be credit, debit, cash. Will you be accepting? Where will you go to cash a check? Depositing money that your business has earned. How will I keep my earnings safe? How will I access funds when I need to use them? Will I save my earnings or invest them back to your business? Getting cash and change. If you are a retail business, do you need a change in small business for your business? Is there a physical branch nearby that is easy to access? Paying your employees, servicing your providers and vendors. Are there employees, contractors, or freelancers on your payroll? How will you pay your vendors or other businesses that contribute products or services to your business? How can developing a relationship with financial institution help your business? That will be on the next thing that we're going to talk about. How can developing a relationship with my financial institution help my business? One aspect you may not have previously considered when selecting a financial institution is building a healthy relationship. However, your relationship with your financial institution can have a major impact on your business. A long-term positive relationship helps build trust and contribute to the success of your business. They may provide useful guidance. They may advocate on your behalf to ensure you receive good service. They may connect you with beneficial business contacts that you needed. They also may help you qualify for better interest. They may be more responsive to your borrowing and cash needs. Now, the great part of it is when you choose your financial institution, what do you really need on your business, and how do you pick the right financial institution? Just 32% of small business owners report that their bank understands their business. However, it is vital that your financial institution understands your business so that they can provide you with the level of service you deserve as a business owner. This is why taking time to research your option is an important business strategy. Is the institution FDIC or NCUA insured? FDIC insured and National Credit Union and Administration insurance protects the funds of an institution's customer up to $250,000 in the event that your bank, FDIC, or your credit union goes out of business. Does it have a reputation for servicing small businesses? Does it have a reputation? Choose a financial institution or representative that has a track record or helping small businesses. This institution will have products aimed to help your business success and can offer you the best customer service. What kind of customer service that you needed or experience does the institution provide? Not all financial institutions provide the same level of customer service. If working with a representative who knows you and your business and or who has community connection is important, make sure that financial institution that you are going to be working on can provide this level of service. Will the financial institution serve my unique business needs? Make a list of the services that products that are important for you. Is ATM accessibility important? Do you want to do most of your banking online? Do you engage in business overseas? Business details like these are very important when you select your financial institution for your business. And what fees? Fees is always important. I think that will be, my pet peeves. Fees is very important. Does the financial institution charge for its services? Once you've decided which service you need from your financial institution, spend some time shopping around for the best rates. Even a 1% rate difference may save or earn your company a lot of money over a long-term period. And now let's discuss about what are some of the common accounts offered to a small business. Many small businesses begin a relationship with a financial institution by opening a checking or savings account to help manage cash on hand. Cash on hand refers to funds that are immediately available for use or that can be converted to cash within a couple of months. There is two different deposit accounts. We have a checking account and a savings account. Checking account is pretty straightforward. It doesn't have any much different with a personal checking account, but there is two types of checking accounts in the businesses mostly. That one of them is actually small business checking account. Some financial institutions offer checking accounts specifically for small business, which typically offer extra services, fee-based transaction, and some of them on the small business checking account also have a minimum balance requirement, and it's usually a little smaller than commercial checking account. And then right next to small business checking account, there will be a commercial checking account. If your business deals with large transactions, a commercial checking account may be beneficial. Fees and credit might be offered are often based on the number and total amounts of transactions within a given period. These accounts often have a larger minimum balance requirement. And then go right next to the checking account. Let's say if you have a big balance on your checking account that you want to save at the side, there is also offers of savings account. There is a business savings account. A safer place to save your business funds is in a business savings account. Interest rates are typically lower than other savings accounts, but so are fees. Monthly withdrawals also might be restricted. And then the second part is money market accounts. These savings vehicles typically require higher balance, but pay higher interest rates than savings account. Check writings also, instead of on a regular savings account, check writing features may be enabled on this type of accounts with some restriction. And then we do have some long terms, not just M&T, certificate of deposit. A CD is a low risk savings tool that typically offers higher interest than a saving account. Funds must be committed for a fixed period, and there may be penalties for withdrawing funds early. What credit services are typically offered to support the growth of my small businesses? That might be your next question. Many companies depend on credit from financial institutions to open, support, and grow their business. The type of credit your business needs depends on factors like how quickly you need funds, how much you will need, and how long you require to pay the loan back. There are three main types of credit used by small business, and I will not go further on these types of loan. Michael Klein will be discussing this further with you in the next slide. So I will just go on the next on this. Give me 1 second. So, the next thing I want to say, besides business lending, well, banking built for business is very important, right? No two businesses have the same needs, whether you're just starting out or well established. We have a range of solutions designed to help reach your business goals. So, 4 services to aid cash management. Managing the cash you earn and spend as a small business owner can feel like a major challenge, especially if you are just starting out. In addition to providing you with change or cash to keep on hand for customers, for retail businesses especially, financial institutions may offer other services to help you manage your funds more efficiently and effectively. We do have, there might be electronic money transfer, lockbox services, remote deposit capture, merchant processing services. We all going to discuss this with our partners next. How can banking service help me support my employees? So there will be, there are some type of accounts. Even if you're on your deposit account, we can always put in payroll accounts. Payroll accounts help businesses control cash flow by keeping payroll and operating costs separate. Using a payroll account can allow you to deposit paychecks directly into your employee accounts and manage employee benefits, deductions, and taxes. And we also have retirement accounts. Some financial institutions may help you set up IRA-based and 401k retirement savings account for you and or your employees. These may both support your long-term financial goals and be perceived as a huge benefit for your employees. And then also at the end, there is also health savings account. Health savings account are a tool for people who are enrolled in high deductible healthcare plans and want a way to save money on medical expenses before or even after paying the high deductible. Some financial institution may be able to help you offer these accounts to your employees as an added benefits. The next, we are on the 21st century, I might call, what should I look for with online and mobile banking services? Do you really have to go to the branch? Can I do this transaction through online? So on the next slide, we will talk about this. Most banks and credit union offer some level of online banking services to their customer. Online services are accessed remotely, usually using a personal computer or laptop. For mobile services, you'll need a cell phone or other mobile devices. So on the online bank, there's 2 parts of online banking, either on the regular website, which is on an online banking, or a mobile banking. So online banking refers to accessing your financial accounts or information via the internet. Services may include monitoring your account activity, which is very important in terms of fraud purposes, just monitoring your account daily. Generating payments, depositing physical checks over the internet, transferring funds among accounts. Monitoring accounts is not just based on just going to the branch, calling the branch, or even calling 1-800 number. Online banking is always available for you 24/7. On the mobile banking side, is banking access via your phone or other mobile devices. Many financial institutions offer applications specifically targeted to small business owner. Services may include adding a digital wallet to make payments, taking and uploading photograph of checks to make mobile deposit, communicating with financial institution representative, or creating custom alerts just to make sure that is the deposit made by you or any withdrawal made by you. Be sure also to follow security best practices when using online and mobile banking services. Your banking information should only be accessed using a secure and trusted connection. So talking about small business banking services, I guess the key points to wrap up this first section, you just want to understand the product and services available to your small business is only the first step to getting what you need to be successful. Here are a few key points to keep in mind. You have options. You always have options. Your small business may benefit from the product and services offered by financial institution. It is important that you know what options are available to you. You need to know what you need. Do your homework. Financial institutions offer different services and levels of support. So it's important to shop around and select what makes sense for your specific business needs. And one of the things that I want to bring into your attention, since some of you may be prospect, don't be afraid to ask questions, because when you ask, you will get your answer. And building relationship at the end of this is very important. Businesses may benefit from building long-term relationship with the financial institution that best suit their needs. And the next steps, right? After all this, maybe trying to find your bank that suits your needs. You want to make a list, create a list of banking services and features that are important to your business now and in the near future. Shop around. You should shop around for your financial institution with a track record of helping small businesses. Compare their service and features. Meet with a representative at the branch. Meet them at your top listed institutions to see if they are a good fit. And don't forget to keep in touch. Once you've selected an institution, check in with your representative once a year to discuss your business goals. And I will stop sharing, Bart, if there is any questions.
There are no questions right now, Christina.
Perfect. All right, so I will so on the next section we will be discussing business lending, and Michael Klein will help us with this conversation and discussion. Michael Klein, if you want to go right ahead. Thank you.
Sure. Thank you very much, Christina. I'm going to share my screen in just a second, but I just wanted to start by saying that when it comes to going to the bank to obtain a loan or a line of credit, I know oftentimes business owners can be a little bit confused because they're not sure who to speak to. But every bank is different. But I think the first step, that makes the most sense is to actually physically walk into the bank, speak with the banker, speak with the branch manager. Oftentimes there are folks in the branch that will be able to help up to a certain credit limit. Every bank is different, but if it is a larger lending need, or if it's a real estate type transaction and someone in the branch isn't able to take care of it, then they'll be able to bump it up or refer it to someone such as myself, who primarily deals with more involved lending, so to speak. But with that being said, let me share my screen. All right. You guys can see my screen, right?
Yes.
Yes, we can. Okay. Thank you.
Perfect. All right. So let's jump right into the next page here. All right. So there are several reasons why businesses might seek a loan or a credit facility from a bank. Credit, by the way, is just another term for loan. Businesses often need help with starting their own business, startup costs, purchasing equipment, acquiring inventory, covering cash flow deficits. That's something that a line of credit typically comes into play to help with, and building a credit history. The criteria that lenders use when approving loan application, these are known as the C's of credit. So one of the things that banks are going to look at is the character of the business owner. And that really reflects your history on delivering on financial commitments, essentially your credit background, both on the personal and the business side. The capacity, that's the business's ability to repay the loan. So banks are going to make sure that you are showing enough income to support the additional expense of having a loan. Capital, that's any money that you've personally invested in your business. And it's the equity that the business has. The collateral, the bank's going to look at collateral if you're purchasing equipment or if it's a real estate transaction. Obviously, we're not going to lend more than that collateral is worth. And conditions such as external factors, economy, interest rates, things of that nature. There's actually another C right now that banks consider, that's COVID. And the information that a bank is going to use to determine whether a potential borrower is creditworthy are things such as reviewing your financial statements, tax returns, your business plans, past revenue, personal credit, business credit, bank statements. If you're not currently banking with the bank that you're seeking to obtain the loan from, banks like to see types of activity and balances that are normally kept in your existing bank accounts. Resume for the principal owners of the business, and any business legal documentation such as your certificate of incorporation, tax ID number, things of that nature. All right. So as I mentioned before, we do look at credit. That's part of your character. So personal credit score, you guys might be familiar with checking it through Experian, Equifax, TransUnion. Those are the credit monitoring agencies that will keep track of your personal credit. Business credit is also monitored by them. Banks typically use Dun & Bradstreet to get your business credit score, and business credit is impacted the same way just as personal credit is. Length of time that you've had credit on the business side and your history of making payments on time and paying off debts. This is a chart for personal credit. It goes from 300 to 850. Banks typically like to see 650 and up as a minimum, although the higher your score, it'll typically result in you getting more favorable terms, meaning lower interest rates. Not always, but usually the case. Banks and credit unions are the traditional sources for businesses to obtain loans, but there are alternative lending options out there. There's a lot of online lenders now that people are utilizing, but peer-to-peer and business-to-business lending also exists. Both have their advantages and disadvantages. Traditional lenders such as banks tend to be more well-established, more reputable. You know who you're dealing with. You have someone that you could physically, go and see in person. Whereas if you're dealing with somebody online or over the phone for lending where it's not a brick and mortar location, you kind of have to just hopefully earn their trust without meeting them face to face. But obviously, we prefer the traditional loan approach. Things to look at when comparing loans. So interest rates, obviously, the higher the interest rate, the more you're going to pay each month on your loan. Interest rates are primarily determined by the Federal Reserve and by Treasury yields. And then the bank makes their rate to you based on that. There are other fees. There's sometimes application fees, origination fees, commitment fees, other closing costs when there's real estate involved, such as attorney fees, environmental, and appraisal fees. The down payment, this is when the business is applying for a loan. Banks require you to put a certain percentage down. We need you to have some skin in the game. The bank's not going to lend 100%. Of the financing costs. We do require that business owners put down a percentage. Typically 25% and up is considered a good amount. Collateral, the banks will put liens on the collateral. So in the event that the loan defaults, the bank has the ability to repossess the collateral, although I can tell you banks do not want to do that. They would rather get paid. And terms and restrictions, always make sure that you read fine print in bank commitment letters and things like that. There's sometimes things like prepayment penalties or limits to how much you can pay per year if you want to make accelerated payments and things of that nature. So just important to keep in mind. All right, so we spoke about interest. I'm not going to cover that. Determining how much you can borrow. Banks use a formula. It's called debt service coverage ratio, DSCR for short. Essentially, what the bank does is we take into consideration the income of the business, and then from there we subtract the existing debts that the company might have, and also we add in the new credit facility, the loan or line of credit that the business is trying to obtain from the bank. And as long as the deal cash flows, then we can move on to the next step of getting the approval. Some businesses do have a hard time getting approved for credit, for a loan, for a line of credit. That could be due to length of time that the business has been established, or certain industries sometimes are not favorable for banks to lend to. Credit score limitations, things of that nature. So there are alternative places to go for help. One of them you already know about, SCORE. The other is Community Development Financial Institutions, also known as CDFIs. They are the U.S. Department of Treasury funded, and they exist in low-income communities or with underserved populations. And they can sometimes assist with lending to borrowers who would not normally qualify for traditional types of lending. And the SBA, the Small Business Administration, they're a government agency that the banks partner with to take on some of the risk in lending to higher risk industries and businesses that have not been established typically more than 2 years. So we did go over a lot. Some of the things that we feel are important for you to keep in mind are keeping strong financial records, whether it's you're doing them internally or you have your CPA preparing them. Leading by example. Remember, your personal financial history will be considered when applying for financing through the bank. If traditional lenders do not approve your application, you can look into building your credit and reaching out to support from other small business organizations. So that's pretty much it for what I have to go over. I do just want to touch on one thing in regards to the SBA, the Small Business Administration. So typically, banks require a business to be established and operational for a minimum of 2 years, sometimes 3 years for larger credit facilities. For startups or businesses that have not been in existence for that long, banks do partner with the Small Business Administration to still provide credit to businesses. The SBA essentially takes some of the risk from the bank. Usually it's 50-50, but depending on the loan size or the term, sometimes it could be a little less. I know a lot of people are familiar with the SBA for things such as the PPP loans, the Paycheck Protection Program loans, the EIDL loans, the Economic Impact Disaster Loan, which came out through COVID. But there are, those are not the only types of SBA loans that banks are able to give. So, oftentimes we can partner with the SBA just to take some of the risk off of our hands so that we can still extend credit to business clients. There are some banks that are known as PLPs, and these are preferred lender. That just means that the bank is part of the SBA's preferred lender program. This is something that you do want to look for when you're working with the bank, that they are a PLP, they are a preferred lender, because what that does is it allows the bank to make decisions for approving the loan without the SBA. So it just decreases the amount of time involved, and it's generally a much smoother process than working with the bank that's not a preferred SBA lender. SBA does typically charge fees, upfront fees for the loan originations, but right now they are being waived in many instances. So it's something to take advantage of. The rates on these SBA loans typically range from prime +3 to prime +8, depending on the credit worthiness, the amount of the loan, and the background of the business. The prime rate right now, as some of you may know, is 8.5%. It's a bit higher than it has been in recent years. However, historically speaking, this is a fairly average rate environment. You might have heard stories about people back in the day having, 16, 18% mortgage rates. So I think a lot of us got spoiled with the low rates over the past 15 years or so, but rates are still favorable, and most of these loans can be refinanced or restructured down the road should rates adjust. So you shouldn't use the higher rate environment as a reason not to apply for credit currently. And that's pretty much all that I have. I do suggest that everybody checks out the SBA website, which is www.sba.gov. And there is a lot more information on the SBA website about applying for SBA types of loans. And Christina, that's pretty much all I have. So I'll throw it back to you.
Yes, thank you so much, Michael. I mean, a lot of great points there, especially regarding to the SBA loan information. There's a lot to take there, just to make sure at the end of the day is to make sure just to wrap up on what your current business needs. And at the end, I think, again, well, let's go throw it back to any participants, Bart, that wants to have any questions.
There are no questions right now, Christina.
Perfect. Thank you so much there. Jared, I mean, just introducing Jared again. Jared is actually going to discuss, any surcharge with the merchant services in New York City. Jared, do you want me to share your page?
Yes, please. Thank you very much, Christina.
Perfect. Thank you. Hold on.
All right. Thank you, everybody, for having me on the call. Bart, thank you so much for inviting me. Today, we're going to be discussing surcharging. And this is a very confusing, ever-changing process. And the reason why it could be very confusing is because you go over the bridge and you're in New Jersey, their rules are completely different than New York State rules. And then you go to Connecticut or Pennsylvania, and their rules may change just slightly as well. So very important. Before February 12th, New York State didn't necessarily have a law. Surcharging was illegal. However, everybody was adding an additional 4% to the bill, 3% to the bill. You didn't know what was right, what was wrong. When you go to your favorite restaurant, it wasn't quite the same price as it was the last time you were there. However, Kathy Hochul and New York State had passed a law allowing surcharging, but with a caveat. So you have to follow these guidelines. The guidelines that are prepared by New York State say that you have to list two prices. So that means if you go to a cash register and they say there'll be 4% more if you use your credit card, that's illegal. If you go to a store and they add to every card, no matter what, and there's no prices listed for a cash price, also illegal. So what they want you to do in New York State is list two prices, just like when you go to a gas pump where you'll have a credit card price and a cash price, or you could list the highest price first and give the client that comes into your store a discount for paying cash. The reason why this was implemented in New York State is because they feel it's too confusing for a customer to come to the register and have to do their own math, where it should be very clear how much they're going to be paying for that particular product they picked off the shelves. The reason why this is a really important topic for business owners now in New York State is because there is a team of individuals that are going out to secret shop businesses all around the 5 boroughs. The first offense is a warning. The second one will be $500, and it'll be $500 for every offense afterwards. So you have to comply with the rules and regulations of New York State, otherwise face a fine. As you know, where New York State is very easily to give these fines, and they're definitely going to send people out in force. I know in New York City, in Manhattan, the borough of Manhattan, for the most part, you'll see that these individuals, have been going out and people have been getting fines. However, they're going to go and move out to the 5 boroughs. So Brooklyn, Queens, Bronx, Staten Island will also be shopped as well. Certainly, a lot of people say, oh, well, my company says that I could do it. Their machines allow me to do it. However, as a business owner, you are fully responsible for that fine. They will not take any type of legal liability over getting that $500 fine. That will be 100% on the business owner. So it's very important that you know the rules and regulations. As you see, this is not M&T material. This is right from the Department of State, the Consumer Protection website, which is located at ny.gov, and you'll be able to see this printout is available for you, and it's for business owners. And as you can see in a demonstration here, these are the type of processing fees that you may see on your receipt when you go to your favorite coffee shop or when you go to your favorite convenience store. And these are all illegal, as you can see. So the gratuity is fine, but the 3% convenience fee is not. Over here, they say there's a cash discount that applies. The 3.9% is included. However, you have to be very transparent and list the actual price of the surcharge with the price of the item, and then you could show them the price of the discounted item. Otherwise, you could charge also. You have the option of charging the same price for cash or credit. That, of course, is always still an option. At the moment, there is no way to just add an additional 3% or 4% to a credit card fee and being in compliance of being legal. So the only way to do that, again, is to give a discount from paying credit card to cash, list both prices, or list the highest price first, or give the same price for both credit and cash. Be careful out there. In the state of New Jersey, for instance, to give you a little insight, their law states that only 3% and maximum could be surcharged to a credit card. And their machines have to be designed where if your credit card belongs to a zip code in a state that doesn't allow surcharging, they are not allowed to surcharge your card. So you have to be careful as well when you're traveling outside the state. You also have rules and regulations that have to be followed, part of your card and your zip code that you belong to. Pretty straightforward. Certainly don't want anybody caught out there with $500 fines. Certainly they do add up. That's pretty much all as to surcharging. And dos.ny.gov/credit surcharge is the website you can go to, or you could reach out to the 1-800 number listed at the bottom here, and they'll be able to go over it as well. They do have a video on the website you could watch as well to show you ways to avoid getting these fines as well. So they're very, very detailed in the fact of showing you what not to do, also what to do. If you have any further questions, I'd be more than happy to to answer those for you.
All right. Thank you so much, Jared. And again, a lot of great information specifically to Surcharge. This is great information for retail businesses that are going to accept credit card payments. I guess maybe any storefront. Bart, is there any questions on this part?
There are no questions and answers right now, Christine, but I'd like to mention to all the participants that if they'd like to talk to any of the bank reps, when you fill out the questionnaire at the end of the survey, if you can just put down your name, email address, or phone number, whichever you prefer, and then we'll just have someone that will forward that on to the bank, and they can be in contact with you to hopefully answer the questions that you might have.
Perfect. Thank you so much, Bart. Yes, we are, we are not only on this sense of the webinar of an hour. We are always welcoming questions. We are always welcoming, to try to answer any of questions for financial educations. We are, again, expert on banking purposes. And, last but not least, we are the exciting part of banking is fraud and how to handle fraud and fraud protection. And Michael Padilla, are you on right now?
I'm here. Thank you. So yes, fraud, right? The exciting part of banking is what you call it there. I would say this. I think the most important part or the best thing that you can do to fight fraud is to really understand that your banks are here to help protect you. Maintain that relationship with your bankers, right? We certainly have services that can help fight fraud. You're not in this alone, right? And I think that's the main point that I want to get across today. But when you talk about fraud, you have a couple of different types of fraud. Over the last couple of years, the increase of fraud is definitely a big concern for the industry, I would say. Banks are setting aside money every year to, with the understanding that there's going to be some fraud losses there, right? So I would say understand the types of fraud. You have ACH fraud, you have check fraud, you have wire fraud, you have account takeover fraud, spoofing. I mean, the list pretty much goes on and on, right? I would say the best thing to do is to always be a little bit suspicious, right? If there's any direction that has changed in regards to you forwarding a payment or transferring some type of funds, you always want to reach out to your bankers to get some advice, right? We hear about this pretty much all day, every day, and we can definitely advise you and try to vet it as best as possible. So what should you look out for, right? So again, look out for any emails that are asking you to change your practice, right? If you're sending a payment out to a certain company every month, and all of a sudden now that you receive an email stating, "Hey, my routing number and account number has changed," best practice is to pick up the phone and use a telephone number that you have in the system that you verified, that is a direct contact to this individual, so you can verify this information. Never just act upon instruction on an email. That's where we see most of our clients run into a little bit of trouble, right? And that's where the fraudsters, try to gain access to your account information, but also gain access to your computer, right? So again, be very cautious as in regards to what you're clicking on, and following any directions that are given to you, via email. Also got to look out for these spoofing calls, right? Calls that appear to come from your bank or someone that you're familiar with, right? With the introduction, or I wouldn't say introduction, but the presence of AI, it's getting a little bit tougher now to distinguish that you're actually, or verify that you're actually speaking to the right person, right? So, use every measure that you have in place, use all contact information. Always better to be safe than to, reach out to your bank stating that you had some fraud, and you need our help to try to retrieve it. In regards to retrieving, if you ever do get hit with fraud, best practice, check your account every day. Anything suspicious, you want to bring it to our attention. The sooner the better, right? The sooner that we have notification that an item or transaction is fraudulent, the best chance we have at stopping it from, those funds being transferred and then lost. So again, review your account every day and bring that to our attention. I would say check writing is probably my biggest headache, and the reason why I have no hair. So I would say you want to get away from check writing, right? Check writing, if you think about you giving out a check, you're exposing your financial information each and every time, right? I have clients that are still administering over 200 to 300 checks. And like I explained to them, each time you're exposing your information 200 to 300 times per month. So there are other services that would give you the ability to send a direct transmission of funds, right? And the banks can assist you with those. And I would say it's definitely better in regards to protecting your account information, which is always the key there, right? So again, reach out to your bankers, have a conversation, see what services that they offer to help you fight fraud, right? Last but not least, again, anytime that you do open, I would say, a business account, you want to always ask to meet with your merchant and treasury management representatives for that bank, right? Many times clients come in and they think that the first step is just to open an account and they're pretty much done, right? But in fact, there are so many services that we offer that we can assist you with, so that you are, better equipped to run your daily your daily banking business there, right? Everything from sending a wire from your laptop, sending out ACH payments, remote deposit of your checks. We pretty much have it all. So don't hesitate. I would say, someone made the point earlier that most customers are a little bit hesitant to reach out to their bankers. And I think it's just due to a general misunderstanding or general lack of knowledge of actually what, we can do. I think that first piece of meeting with your bankers and really getting a full understanding of what the bank can offer you is pretty much the most important piece there, right? And last but not least, you should all have direct contact to your bankers, right? If your bank is not offering you or giving you the ability to reach out to your bankers via on their cell phone, right? That's something that I think is definitely something you consider when you do choose a bank. So I know my time is short, so I tried to cut it a little bit shorter than what, because I can definitely talk for days, but love to answer any questions or welcome any of you to reach out to me if you'd like to have a conversation.
Well, Michael, you have one question, believe it or not. It's from a person who says, we received a couple of suspicious emails lately. Any suggestions on how and where to report it? Microsoft is our email provider, service provider.
So number one, if you feel you've received an email that you're questioning, if the email is asking you to change the routing number, account number, that's an immediate red flag, right? So I would definitely, if that's the case, I would definitely pick up the phone and call the individual and use a number that you have in your system, right? You want to watch out for the emails, right? Because they try to make them look as if they're coming from the individual that you've been doing business with for a while, right? And usually they'll just put a dot somewhere, a period, something that you wouldn't readily notice if you're just quickly looking over the email and trying to answer it, quickly there. So again, take a look at that email address there, but always pick up the phone and verbally confirm any changes in regards to a routing or account number. I
All
hope that
right.
answers you.
Anything else for there?
That's it,
Yes.
Christina.
So yeah, I mean, I guess wanna maybe add on that. Thank you so much, Mac Padilla. There's a lot of things going on out there. Like Mac Padilla said, there's a lot of fraud, and there's these fraudsters usually are more expert than a lot of people out there. And one of the thing again, like for the email, one of the thing on that screen says, maybe use a VPN. And maybe Michael Padilla will say the same thing. It's very, very important to know what phone number that they use on that email, because that phone number might not be the bank phone number. Because they're having a 1-800 number, it doesn't mean it's the right phone number. Always use the phone number that provided by the banking website, or like we all said, always know your banker and call your banker first before actually even calling that 1-800 number. Don't get excited, and sometimes we are worried about our account because that's our money. But at the same time, we want to make the right decision to make sure our account is safe in the right manner.
And I'll add this, Christine.
Yeah, go ahead, Mike.
If I may, and you made a great point, right? Take your time. I think the biggest issues that we've had in regards to losses for fraud are clients that are just trying to do things too quickly, right? You get the email, you try to, you think your job is to get those payments right out to the person right away. Take a few minutes every time, right? If not a half hour, just to review, make sure that you are, doing everything correctly and that you've pretty much checked all the boxes in regards to, what you need to look out for in regards to fraud. And like Christina said, just reach out to your bankers. We're here to help you.
All right, I think this is sum up with all these, I guess, discussion, Bart. Hopefully answer any questions, or even if it's not going to be on this webinar, we are again welcome the questions through email or phone number, and you can continue to actually contact Bart, and Bart will be more than happy to hopefully, continues forward that email or phone call to us, and we are more than happy to help. Thank you so
Well,
much, Bart, for this invitation. And again, we are from M&T Bank, and we want to make sure that all the attendees here hopefully answer some of your questions, or if not, we are going to be here to help you. Thank you.
Thank you, Christina. I want to thank you and all the staff, all the members of your staff, not your staff, but M&T Bank, Michael Padilla, Michael Klein, and Jared for the wealth of knowledge you've given to our participants today. And if you could stop sharing your screen just for 1 second, Christina, I would appreciate that. There you go. Because what I'd like to do is just finish my little thing here, if I might, just take care of this. Oops, I've got to do that. There we go. This is just want to thank everyone for attending our webinar today. And like I said, if you have any questions, put them on our survey that you get shortly after the end of this webinar. And I'll again pass them on to Christina, and then hopefully we'll get them taken care of as soon as possible. Okay? Well, thank you
all
again for everyone.
You have a
for
nice
attending.
day, guys.
Take
Thank
care,
you.
everyone.
Thanks
Thank
for the
you.
opportunity, Bart.
No,
Thank you,
thank you
Bart.
all
Bye.
for your time. Take it. Bye-bye.
Thank you.